Hi, and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara Mays, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome back to the next episode of Two CPAs and the Mic. If you've joined us before, you know that our goal is to cover relevant business and tax topics. We're going to apply straight talk, some unexpected humor, and practical information without all the jargon and stuffiness of your granddad's CPA. Today, we've got another incredible episode. We are going to be talking about the concerns that our clients seem to be having these days. It's somewhat of a unknown with what's going on in the economy. We have a presidential change, these kind of things that are weighing on our clients' minds. So we're going to talk about economic concerns. We're going to talk about operational concerns. And we're going to talk about everybody's favorite topic, the current and future tax concerns that come up. Yeah, we are excited about that today.
Big stuff.
Yes. In the studio again, one more time, I am here, Jeff Frable. I've been a partner at CCK Strategies for 25 years. I've got my trusty co-host, Mays.
I'm Sara Mays, and I have been a partner at CCK for
2 months.
But I've been at CCK for 18 years.
And we have our trusted in-studio producer, KP. Hey, KP.
Good morning. Good morning.
Which is really Christy Porter.
Christy Porter.
Yeah.
We call her KP.
Those who don't know.
And just understand one other thing. We are operating today on a Monday morning,
Yes.
8:30, which is not our norm, but we got to get the juices flowing a little bit here. But Sara, why don't you share with us who's on the mic this
Today
episode?
on the mic is a guy who just knows all things. And I'm totally going to embarrass him right now. But yes, this is Aaron Spoon. And he's with us today. We're so excited he's on the mic. Aaron, why don't you tell us a little bit about yourself?
Thank you, Sara. So, I don't know everything. You totally set me up to fail for
That's
this.
good to know. Good.
Liar.
What I do know is I actually interned at CCK in 2001 and decided at that point I was never going to be a CPA.
Never.
Never.
Never say never.
Never say never.
So, came back to CCK in 2011. I've been a partner since 2017. Sara trained me when I came. She hates that fact.
I hate that. So you got to get me back there, didn't you?
I did. So, been a partner since 2017. Spent the majority of my time working with clients trying to grow their businesses and then sell, exit, transition, whatever that may be.
Yeah, so you kind of have a little bit different of a background, Aaron, than the other partners here. Give us a little bit of background on what you were doing before you came to CCK.
In the never
zone,
yes.
when you were a high-powered M&A consultant in New York City.
I was a stupid kid in New York City. Stupid kid in New York City who didn't know any better about what I was asking to do. So I was working for a financial services firm and they asked me to go look at a company. I said, well, I can do that, but I need an attorney and an IT professional. And for some reason, they let a 26-year-old kid lead an M&A group to go out and explore new ideas and then prepare board reports and come back. That does not translate to Tulsa really well.
No, it doesn't.
No. Interviewed with a lot of people, talked to a lot of people, and everybody went, well, you're overqualified for what positions we have available, but we really don't want you to start out at a lower level. So fortunately, John Curzon, one of the founding partners in All Is Wisdom, said, just come work for us. Let's see what happens. And
the rest
I
is
rumbled and stumbled through a few years and finally settled on, I think I can make this work.
Yeah. So you were talking about your client base and what you really excel at and where your expertise lies. It's not just tax strategy, but it has to do with getting into the nitty-gritty, the details with your clients about what they're experiencing, how they're operating, what the future looks like, those kind of things. Isn't that right?
Yeah, it's always interesting. Tax is a tool that we have to help our clients succeed. And a lot of times there's a transaction or a tax need. That's what's bringing them in the door. But where we as a firm, and I try to lead through examples on this, is really understanding what our clients are experiencing and what are their concerns and how do they figure out, well, I'm trying to go to point B. I'm here right now. How do I get there? And a lot of times that it's not tax. Tax does not lead the conversation when you're running a business.
No, because taxes is in the past. You're reporting things in the past and they want to know what's going ahead.
Exactly. And so tax is, while an important part of the discussion, they need to understand the implications of it, but it is not the be all and end all of trying to make a business decision.
Right.
A lot of my clients in the real estate space, so they're developers, they maybe own multifamily housing. Interest rates have such a huge impact on whether or not they can cash flow their business. And we're seeing them make some very unique decisions that they haven't in the past, where cap rates are such that they're actually selling properties just to open up cash flow, but not to make a gain on that property. I
just can't even imagine living in a world like that. Like, how can you even think? I mean, and I can see where our clients are like, how do I even make decisions if I'm not going to make a gain?
Yeah. So this is not a unique situation, though. I think we've become overhyped and overly sensitive given all the forms of communication we have right now. Everything's instantaneous. Somebody says something and all of a sudden it's in the news, whereas 4 or 5 years ago, it would take a few hours for that hit. Now it's instantaneous.
Along with a certain opinion that comes along with that news.
Multiple opinions.
Yes. Nothing is quoted as just straight
news.
Fact and make your own opinion about it. Everything has its own spin. It's just become more extreme. I don't think that's a change in terms of how we receive information. It's just more extreme. And so we've become overly sensitive to it. With that, though, the same way we talked about, people are talking about tax law change. That's the other thing that everybody wants to know. What's going to happen to my tax bracket? Am I going to pay more or less in taxes? The answer is, I don't know. And I don't know when that's going to happen. Jeff, do you know when Congress is going to vote and how they're going to pass that bill and what's going to show up?
Crystal ball.
I have the backbone to the White House. Yeah,
Right.
the crystal ball too.
Yes.
I look at that every morning too. So
Didn't you go through this with the last big change in the tax
yes,
law?
I used a crystal ball as a prop.
I
Ouija
remember,
board?
yeah.
I have a Ouija
I
board.
try to stay away
Magic
from
8 ball.
Magic 8 ball, right?
Just shake those.
It does feel a little bit like the dark arts, but at the end of the day, nobody knows what's going to happen. And the conversations with my clients have been more along the lines of our smart business owners make money regardless of the economic situation, regardless of who's in the White House and what's going on, because they're flexible and they're adaptable to everything that's happening. They don't get overly concerned and go try to plan out 2 or 3 years. They don't go buy a bunch of inventory because they're worried that tariffs are going to drive the price up.
Right.
They're quick and nimble and adaptable, and they let some of the noise go so that they can focus on really what do they do well. And they can't, nobody can control those other things. We can't control them for our clients. They sure can't control them day to day inside their business.
Yeah, I mean, it's a difference between you can still be reactionary in your business and just kind of wait for things to happen. But you still need to be, like you said, very nimble and be able to adjust and shift if we need to, if something drastically changes. But usually we know when things are going to change and it's not an instantaneous thing. There's usually some time before a law changes.
And there can be forethought. So a lot of people look at it as being reactive versus proactive. There's something in the middle there. Trying to be proactive, everybody thinks they need to be like cutting edge, bleeding edge in terms of making decisions and trying to call what's going to happen in 6 months. In reality, most of those people are running through multiple scenarios, the what ifs. And what's that trigger point to make a decision? So if it's a tariff we saw this with some solar companies that we were working with, they were worried that the price of the solar panels coming from China was going to skyrocket. They sat in a position and said, okay, how long do I wait to make a decision about when to place the order and when to have that inventory in place? Some got way out in front and ordered way before tariffs went into place. And now they're sitting on inventory and they don't have cash because they spent all their money.
Mm-hmm.
Others waited too long and bought really expensive inventory, and they got killed because their margins were next to nothing and they couldn't compete with those that had cheaper goods. Those that did really well said, I'm not going to try to time it perfectly. It's like somebody trying to time the stock market. You cannot time the low or the high. And those that try to do end up getting stuck and in a worse position if they just waited and been a little more conservative.
I think it's an important conversation because so many of our clients are in that place and they're at a meeting, and depending on their circle of influence, what they're hearing, who's panicking, who's not. In a way, as you're talking about this, do you guys remember the scene in Trading Places where the brothers are trying to manage?
I wasn't
pork
allowed to
bellies?
watch that movie.
No,
Okay.
I did not.
So we'll
Aaron
edit,
doesn't know what movie
that
you're
part
talking
out.
about.
But for anybody in our audience who remembers, it is a lot like I think it's important for our clients and business owners, our listeners, to hear how important this is. That there is a different perspective. That for me, I'm probably thinking, am I thinking about this the right way? They seem like they really have it together, and they're kind of panicked, or they're pretty laid back, and should they be a little bit more lit up? But it's trying to find that middle ground for each person, and being able to have that person, that advisor
Trusted.
that they trust, who can say, yeah, these are things we're thinking of, but what's really important to your business? Think about the people that you employ. Think about the product or the service that you're providing. How can you make that better? And then at the end of the day, isn't that what the end goal is?
Absolutely. I will go back to what Sarah made the point when she made the introduction of that I know everything. I don't know everything.
Right.
Now, I read a lot, and it's a lot of random stuff. And a lot of people will say, well, why are you reading that? Because the random is what comes up when you're having conversations, you're trying to consult with your clients. You don't have to know everything, but you need to have some position to be able to say, yeah, I'm aware of that. But logically, why does it matter? And it's being that sounding board for our clients, regardless of the regulation, regardless of the administration that's in or what's going on in the economy. How do you just sit and listen to your client, hear what they're really trying to accomplish, and then refocus that? Because there's a lot of distractions. We're all dealing with a ton of information, and our business owner clients more so than anybody.
Right. And I think the one thing I wanted to point out is, as a CPA, you're not in these meetings and conversations to give them what tax bracket they're in, or is this deductible, or is that, what's the best tax strategy? You're, as Christy mentioned, you're a listening board. You're, as Sarah mentioned, a trusted advisor, and you provide input. But a lot of times what you're doing is just keeping things calm for the business owner and giving a voice of reason.
Yeah, absolutely. And some of that comes back to the scenario planning. How do you be proactive? Well, you be proactive by making plans, but not executing until you reach that decision point. So we may run a worst case scenario. If Trump's 2017 tax change does not come through and they don't reinstate it, what does that mean for 2025? Well, we use that as the worst case scenario, but we may plan, well, what if they do come into place? And as we get closer to that decision point, there's a clearer picture that the business owner can use to make decisions.
So that's several of the different things going on in the economy today that our clients are worried about. But those kind of translate into operational difficulties, and some of
Absolutely.
them you mentioned. But we've kind of talked through a few different things like cybersecurity, the workforce, and retention, things of that nature. What are the biggest things that you're hearing?
Biggest things that I hear are primarily workforce and retention. The funny thing is, it's nothing new. In 2011, working with a heavy manufacturer, they couldn't find people to run their cutting machines. They just wouldn't show up. They couldn't find anybody to staff their accounting department. What we're talking about is nothing new. I mean, we've experienced here at CCK, yeah, it's hard to find people, and we talk about it, but we've been talking about it since I started.
Yeah.
I do think it is the same thing over and over. But to your point earlier, we're just being more inundated with information from all over the place. I think the world is more reachable now and before, even in 15 years ago.
Yeah. I think all this also leads to cash flow concerns. Ultimately, cash flow leads every decision that most business makers have. If I spend money now, am I going to be able to recoup that later at a higher ROI than if I waited? So when you look at the cost of, hey, we're struggling to find people and they're more expensive. Are the cost of our raw materials going to go up? What is that going to mean from a cash flow perspective? And if I go draw on my line of credit, well, now my interest rate is 2 or 3 percentage points higher than what it used to be. Now my net income margin is squeezed. How do you manage all those different components in planning?
Very delicately. Right.
Very delicately, and with a lot of input, a lot of knowledge, and a lot of what ifs.
And most of the time, are you talking with the owner, or are you talking about with the CEO, if they're different people or a group of teammates they have, or what?
You're talking with whoever the decision makers are, and everybody has a different perspective. So you could be working with the controller who's seeing, hey, we're running more on overtime, so our overtime costs continue to go up, but nobody's quite seen that yet because it's spread across multiple people. You talking to the controller who is also running treasury and trying to make sure, hey, do we have enough cash to cover 3 weeks of payroll, 2 weeks of payroll, 6 weeks of payroll? What does that look like? And then the owners has a whole different perspective of, I'm not worried about cash immediately now. I'm worried about cash in the future. So they all have a very different perspective and different timelines. So you can't pull on just one person's experience or perspective. Otherwise, it becomes very myopic and you get so focused on one thing, you can lose sight of the big picture. Or you're so focused on the big picture that you can't manage the day-to-day, and you have to have that balance.
Mm-hmm.
You sound like you're a family counselor.
Yes, I am. That is a running joke.
You have mom and dad who have the final decision making. They've got this legacy. They've got history with the family, the company, but they have empowered a couple of their children to take on different parts of the family, the business, and then you have other kids and components that are still part of this family. So what you're saying is, I mean, I'm hearing it and I'm thinking about the emotional side. You know, you've got these drivers, these motivators that are in place. And then you have the emotional component that is a part of that, which really comes into the conversation as well. And as the advisor, you have a little glimpse of that too, right?
Oh, absolutely. And you want to talk about emotions, take a mom and a dad and 2 kids that have their own family issues and get them together running a family business together. And now you've quadrupled the amount of emotions that you're dealing with. And you say family counselor, but it is a lot of times that. Is this really an issue, or is this something that is stemming from some other
that you
outlet?
Have absolutely no idea about or control over, because it's all emotional and relational and things of that nature?
Absolutely.
Has nothing to do with the economy, has nothing to do with tax law.
Nope. Employers, employees. Nothing.
But you can't have a productive conversation unless you can get through that and around those pieces.
And I think the coolest part about the position that we're in is that we can help ask those questions to help get to the root of that, because they may not even know what it is. You know, I mean, they may just have all of these emotions and they really don't know what the root of the issue is.
Be careful what you might ask for, because you never know what's going to bubble up, right? So we talked about the economic concerns and the operational concerns. Let's talk a little bit about tax law. There currently isn't anything significant that's changing in 25. I mean, there's little changes here and there, but
it's coming.
What are the hot topics in 2025 for current tax law?
So the House passed a bill last week, I believe. The Senate will pick it up at some point, that does include the 2017 tax law changes, reinstating those.
Okay, so we're obviously going to get into that, but so just for perspective, give some background on the 2017 tax law changes, why they were important, what they impacted, and what may change if those are not re-upped again.
Yeah, from what we see that were most impactful to our clients in that are really 3 main things. One is the estate tax limitation. What is the lifetime exclusion for estate taxes? That is sunsetting at the end of 25. Mm-hmm. And if the Trump tax law change comes back in, that would no longer sunset. So everybody's looking at a lot of estate planning, valuations. How do we make sure that we take advantage of what is in front of us right now?
And just at a very high level, there's a lifetime exemption. If you're married, that exemption is currently what, about
it's around 14 million. It's inflation
million.
peg, so it goes up
right
every year.
And if this is not reenacted, that drops down to 7 million.
Mm-hmm.
And basically everything in your estate over those exemption amounts is taxed at about a 40%,
40%.
Yep. 40%.
federal rate. So that's why it's important.
That's why it's important. We see this on repeat a lot with the estate tax limitation.
Yep.
Trying to remember the last time, was it 15 or 16 when we had another change or expected change?
Scare is really
Scare. It was a scare. Everybody did a lot of planning, and then 3 or 4 years later, it jumps back up.
Right.
So it's being opportunistic with what's in front of us. So that's one big component. Bonus depreciation has been a big conversation with clients as well.
Yes.
Makes a huge impact from a cash flow perspective on the tax side. If we've got 100% bonus depreciation on new qualified equipment or improvements to properties, that's a huge deal. And what are we at 2025? It drops to 40?
Yeah.
60 or 40?
60% was 2024. So yeah, we'll be at 40% in
At 40%.
And basically what we're talking about here is you buy a piece of equipment, how quickly can you write it off?
Yeah,
and because
right.
if you write it off in layman's terms, that reduces your taxable income, which reduces the amount of tax that you pay. So there is benefit. You have cash out the door. There is benefit to get that return more quickly than over a period of time with like normal depreciation.
Absolutely. And that really impacts manufacturers and then commercial real estate owners that have really large commercial properties that
Right.
rely on cost segregation studies for a lot of their tax benefits.
And you could always go to the 179 deduction, but that's got some limitations to it and has never been as flexible as the bonus depreciation.
Correct. Bonus is just so much more flexible and a much better tool when for tax planning. And it's big on our clients making decisions whether to expand facilities or expand operations, or do I buy that new piece of property with that building on it? It's really slowed down or made people rethink what are the economics of doing this.
And this has been around for some, I mean, this was initiated back in after 9/11 pretty much, wasn't it? In an attempt to kind of restart the economy.
But it was limited to 50% back
right.
then.
But it's been with us in some form or fashion for several years now. And it's become one of those go-tos, it seems like, and everybody knows about it, but it could go away.
It could go away. The funny thing is, I liken it to tariffs. You know, how sticky is a tariff? Do people get used to it and it just becomes the new set standard? I feel like bonus depreciation has become the set standard that people expect.
Yep.
I buy something, I should be able to take 100% deduction in the year I buy it.
That's right.
Yep.
The other thing is a little more esoteric, but it's more in alignment with we have a lot of tech firms. We have a lot of people doing very unique development on new products. And that's the R&D tax credit, which is a great tax credit. Really helps stimulate the economy. You can use it to help offset payroll when you're first starting a business. Produces a lot of good things. The 2017 tax law change actually implemented where you can't deduct those expenses anymore. Now you got to capitalize them. Now all of a sudden, R&D tax credit is actually a net tax cost, which is problematic for those that are young developing companies. We've actually seen that in some scenarios go from a significant loss on the books to all of a sudden now I have taxable income and I have no cash flow. I might be pre-revenue company, but I've plowed millions of dollars into development to a piece of software or a piece of equipment. How do I pay that tax? So the hope is that some component of unraveling that capitalization requirement on those expenses will come out in 2025 as well.
Anything else, Aaron, as far as the tax reform that could go away at the end of 25 that
You've got bonus depreciation sunsetting. There's a question of what will happen with the SALT tax limitation, so the $10,000 limitation at the individual level.
Which has been a haircut for many business owners for years now.
Yeah. And, will it go away? Most of it really does not impact business owners as much as it does an individual W-2 earner. So it's not as big an issue. Now, it has created a lot of complication on the state tax side.
Yes.
But is not something that has been so in everybody's face. It gets a lot of press, though, because it impacts, or people want it to impact them. Let me put it that way.
Right.
And the qualified business income deduction.
Yeah, that sunsets as well.
Mm-hmm.
Which is kind of a big deal.
It is.
Because it takes that high effective rate for a pass-through business owner from 37 down to 29.6.
Mm-hmm.
So
it's a material change.
Right.
So we don't know. So how do you plan? And that's what our clients are really coming to us to say, how do I plan for this?
And as long as we're given some time, we can plan. It's when it drops. I mean, how many years ago was it where there was something that was going out at the end of the year and we had like 2 or 3 different scenarios depending on what was going to happen? I mean, the more that they could give us some advance warning on these things, the better.
They could. As a business owner, what I advise my clients to do is plan as if the tax is going to be the worst possible situation. The business decision you make still needs to make sense without the tax implications.
Yep.
If you have to have the tax implications to make your business decision cash flow or have a positive ROI, don't do it. Tax law changes, sometimes retroactively. Make good business decisions. Let us help structure them. Let us help make some of those decisions proactively on the front end.
Right.
But don't make it because of the tax. And that's where I've seen my clients get themselves in the most trouble, is when they make a decision based on what they think is going to be a good tax play. It makes people get out over their skis in terms of what is their risk tolerance. And they're dealing with something that no one has direct control over. Congress thinks they have control of it. The IRS thinks they have control of it. Neither one ultimately does. So how do you plan with that? Well, don't rely on it 100%.
No, that's right. It's just one factor to think of.
Exactly. Make good business decisions and you'll be just fine.
Well, and as we get ready to kind of close up here, I was going to ask you, Aaron, if we have a business owner that's listening to this and has concerns, what would be the one piece of information that you would pass on to them? And it sounds like it's run your business the best way you know how, and just let these other things kind of develop and work with a trusted advisor along the way.
Yeah. Have the right team around you to question why you're making decisions, to challenge you on what you're doing and why you're doing it. And that only strengthens the ultimate business plan for the owner. And
Gotcha.
that's key. So plan, don't rely on any individual thing,
advice.
and have conversations with people that you trust.
Just like location, plan with people that you trust.
And ultimately, it's all about right time, right place. You can have the best idea in the world, and if it's not right time, right place, it's going nowhere. There's a million examples of that.
Yep.
So as a business owner, you have to be resilient as well.
Yeah. Deal with the ups and deal with the downs.
Mm-hmm.
Yep.
Win with class, lose with class is what I used to tell my son when we played baseball. Is when you're up, enjoy it, and know that the down times are coming, and then handle them in a professional way.
That's right.
Well, Aaron, for a guy who knows it all, you really laid it out there for us today.
You're welcome.
So appreciate it.
Could that
You look like you want to say something, but I'm not sure.
It's not podcast appropriate.
Not podcast appropriate. It's not CCK podcast
Right.
appropriate, but we do appreciate you taking time, sharing
Yes.
your expertise and your insight. It's a little bit different than what we've had so far on the show, because you're dealing with these business owners directly, and sometimes these situations and the things they're encountering are not the most fun to deal with, and we as the trusted advisor have to step in and take a role that we're not excited about, but we do our best to take care of as we go through that. So
Absolutely.
anything else, Maze? You got anything to wrap up with? You good?
I think we're good.
KP,
That's
you
a
good?
good one.
I'm good.
You're good? Aaron, you good? You know, we haven't even brought up your nickname.
Which one?
Which one?
Well, Spooner, of course.
Oh, yeah.
I was going to say
That's okay.
AA Ron.
Hey.
There's several.
This all seems like a good place to just cut it.
Well, I was going to mention number one that Aaron is the most sockless partner that we have. He's wearing socks today, but he generally doesn't. And he tends to have the most interesting tattoo of any of the partners. I will say that. So
They're going to say most interesting clients.
well,
Same.
no, I was going to go with the personal touch thing.
I thought you were going to go with socks. Yes, when he wears them, they're really interesting. I wasn't sure where we were going with that.
Well, as we close, if you have any questions or want to connect with us, please email us at Maze. What's the address?
Podcast at cckcpa.com.
So let us know what you're thinking. If you have any questions, comments, criticisms, address those to Sara or
AA Ron.
AA Ron. But as we close, we want to thank, as always, CCK Strategies, our sponsor. Thank you, KP, for keeping us on the right track. To Robert Mays for his most excellent intro and outro music. To the wise sage, Clarence Fisher. Thank you with Tulsa Internet Marketing Services, and Lee Dollenberg, our IT guru. So with that, we will wrap up. Join us next time when these two CPAs chat about relevant business and tax topics, and you can find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs and the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.